What's up, everyone? I hope you had a fantastic weekend, and I hope you're ready to roll because this week will be a very exciting one. Not only do we have insane earnings from powerhouse companies like Apple, AMD, PayPal, Palantir, Shopify, and a bunch more, but we also have Jerome Powell coming back this week, but this time for an interest rate decision, so you guys know that will be very exciting, and we have some other very important things to cover going into this week. We're about to see some crazy price action. In today's video, we have some awesome setups and predictions for the week, and we have a lot to talk about, so we're super excited. You guys should be as well. But with that being said, Tom, let's jump right into it.
Yeah, that market last week was pretty wild. We saw some pretty bad downside moves, and on Friday, that downside move did not stop. There was a big support around 412 on the SPY heading into that price action Friday. And what happened? Well, we ended up breaking down below it after a couple touches there. So it was a pretty cool support break to see. Now SPY is sitting down around 409 to 410, which is another big level. So if we're able to break this come Monday, maybe the sell-off can keep coming in, Mike. But I don't know. I think there's going to be a couple green days mixed into here a little bit at some point. And what's going to play the big role this week? It's going to be those earnings coming out. So, Mike, we have a big schedule ahead of us. On Monday, we have SoFi, McDonald's, Pinterest, and After Hours. Tuesday, Pfizer, AMD, and After Hours there. FSLR. Pretty big stock there even, it's kind of under the radar. Wednesday, we have Norwegian Cruise Lines, PayPal, Roku, even Qualcomm. So there are so many reporting this week, Mike. I can't even name them all. Of course, Apple and DraftKings Thursday. If I had to pick a favorite, I gotta go with DraftKings, Mike. I mean, they've been starting to report more profitability, and that makes me really, really happy. So hopefully they can come in with more growth and keep that uptrend going.
Yeah, I wish I could pick, one favorite earnings stock for this week, but I just can't. I have to pick a whole day, and that's Thursday. We have Apple, Square, DraftKings, Shopify, and Palantir. That is going to be one crazy day, and that's not even including some of these other stocks like Starbucks and Coinbase. So, yeah, it's super exciting on that side of things. I hope you guys are ready because this is going to bring in a ton of volatility, and it will be very exciting. But, Tom, not only do we have earnings, but we also have a pretty key interest rate decision coming up. We could see that on November 1st, which is Wednesday, at 2:30 p.m. Eastern Time, we have another interest rate decision with Jerome Powell, and basically there's a 98% chance that Jerome Powell keeps interest rates exactly where they are, and there's about a 2% chance that he actually lowers them. So, very interesting there, but anytime these events happen, they always bring in that crazy volatility that we're looking for.
What the hell, Mike? Is Powell lying to us? He kept saying that in these past couple meetings that there was going to be a hike by the end of the year. Maybe he means December. I don't know, but some of those Fed members might have been a little bit wrong a while ago, just like they were wrong whenever they said that inflation was transitory. So I feel like you can't go without bringing up transitory whenever you talk about the Federal Reserve. But, this event's going to be big, obviously. We talk about these interest rate decisions all the time. So 2 p.m. on Wednesday will be important. I think that they're going to pause it, but obviously if they do cut rates, then that will be a big surprise. Now, of course, if they hike it, that'll be an even bigger surprise, but I don't see that happening, especially with Israel kind of pushing things towards, going more towards cuts now.
Exactly. So 2 p.m. is the interest rate decision. 2:30 p.m. is when Jerome Powell actually speaks. And then later in the week, we have the unemployment rate before market open on Friday. But we'll cover that more as that gets closer. But what's also pretty interesting, Tom, is the money vacuum that has been, quote unquote, secretly been happening behind the scenes. Not too big of a secret, but I think it's happening more than people think. And basically, as we all know, when COVID hit, the government printed more money than you could possibly imagine, right? And we saw the money printers going burr and everything shot up, whether it was stocks, houses, cars, pictures of monkeys, cryptocurrencies, whatever you think, it was booming. And now we're kind of seeing the exact opposite. Instead of the money printer on, we have the money vacuum on, just sucking money out of the economy. And so far, there's been around a $1 trillion drawdown from April 2022 to today, right? And that goes to show you that, the economy we're in right now is not the economy that we've been in just a couple years ago. Things are structurally very different. And I think the market is starting to realize that. There was a lot of selling pressure back in 2022. 2023 so far has been amazing, but the past couple weeks and months have been starting to get pretty bloody, and I think this is something that, we have to be aware of going forward, because this money vacuum isn't necessarily set to calm down anytime too soon.
Exactly, and I know that Powell and the Feds will talk a little bit more about that at this interest rate decision here. People are really waiting, Mike. When are the Feds going to start easing? When are they going to quit putting that pressure on the economy? And I hope that they start easing, if not even start, like we said, turning the money printers on a little bit more here over the next year. But right now, it's definitely a scary time out there, and we're going to get even more of that information this week whenever Big Daddy Powell speaks. So hopefully he can kind of shed some light on some of these things. And I'm kind of hoping that the pressure from Israel and all these tensions going on globally aren't weighing too much on the economy either. I'm sure that they are, though. And if things get worse, I'm sure it could cause even more problems. And I know Ukraine's still waging on too. So it just seems like there's just more and more problems stacking up for us.
Yeah, I have a feeling those money printers aren't coming back on for a while, but we'll see what happens. But Tom, I also want to showcase something very interesting that I haven't talked about in a while, and that is on TradingView at least. It's called S5TH, and you guys probably hear this and you're like, what is that? Basically, what it shows is the percentage of stocks that are above their 200-day moving average in the S&P 500. So, like what we can see right here is right now it's at 24, and essentially what this means is that only 24% of stocks in the S&P 500 are above their 200-day moving average. Obviously, that's pretty bad. It's not necessarily a good sign. And what's very interesting is that every single time, basically, that this data gets to like you could say like the 10 level or lower, that ends up like signifying a bottom for the markets, right? But until that point, we still have some more selling pressure to get to that point. So what I'm trying to say right now is that, the market is definitely oversold in many different ways, but at the same time, the selling pressure is still very strong, and there's not too much necessarily stopping it. You know what I mean? We're just seeing more and more selling pressure come into the market, and by a lot of metrics, the market can go even lower. So, keep that in mind going forward. We're really starting to see a big shift than what we've seen for most of 2023.
Yeah, exactly. And, we've talked about this a lot the past couple of weeks, Mike, about credit card delinquencies. We've looked a lot at corporate bankruptcies, even just bankruptcies overall. The way that those numbers are becoming higher or getting into the realm, you could say, of like the 2008 levels. Some of them are actually higher depending on which data points you look at. But these data points are getting into those realms of just becoming terrible, right? And whenever that happens, you're going to see stocks start to pull back. And we're starting to see that finally come in. A lot of people did not think a pullback down to here was possible. But to the perma bulls out there, there are always pullbacks mixed into the market. And, whenever you're trading, Mike, this is why it's very important to be adaptable, like we always say. We bring that up a lot because if you're a perma bull, well, during those downtrends, it's good to kind of flip that switch in your brain, right? And maybe go back towards the puts a little bit more. But you're seeing a lot of information right now, Mike, that is very scary, right? And I just want to say that for short-term traders, it's been really fun out there. It's been fantastic. We can trade things like UVXY and SQQQ, and these stocks are doing very, very well.
Yeah, when we look at, whether it be certain stocks falling a lot, or whether it be credit card delinquencies rising, or, any other bad sign for the economy, I don't think anyone should be surprised by that, because this is exactly what the Federal Reserve is trying to do. Inflation was way too high, and they had to fix that problem. And unfortunately, there's not necessarily an easy way to do that. So everything that we're seeing right now is, in one way or another, done on purpose by the Federal Reserve, because they need to calm down inflation, and the war against inflation is still not complete. So we'll see what the Fed say on Wednesday, but it'll be very interesting, and it will definitely move the market. So definitely pay attention on Wednesday at 2 p.m. and 2:30 p.m. Eastern time. But Tom, there's even more we have to talk about, and that is the seasonality that we currently have lined up. What we can see on the chart right now shows the average year for the S&P 500 with data going all the way back to 1950. Right where that arrow is, on like the right side of the chart, we can see where we are now. Normally, stocks have a bottom on October 27th, but just because this is the average doesn't mean it has to happen this time. You know, Tom, I know we showed some data a little bit ago looking at the market where it showed that like the past like week or so was supposed to be like one of the most bullish times of the year, and it ended up getting smacked. So like, you know, you can't always rely on averages, but I do like to show this, you know, just for everyone's easy reference.
Exactly. You know, we have talked about that a lot. And in September, you know, September played out pretty well to the averages. But so far, October has been kind of going against it, Mike. You know, October's been that month where the second half of it specifically usually starts to pop off a little bit. And the market has done nothing but go down. And, you know, every year is different. We always talk about that. This is why we don't necessarily like historical data like this too much, because every single situation is different. And obviously this year, with what Powell's doing, combined with Israel now, combined with Ukraine, combined with pressure on consumers, I mean, we're in a different situation. So it makes sense to be down, but I love looking at that historical data though, just for the fun of it, right? It's always good to see where the market usually is. And like, let's be honest, most years aren't as bearish as, or, you know, I should say that because this year overall has still been pretty good, but like the past 3 months aren't usually as bearish as they are right now. There's just so much hitting the economy at one time, I feel like.
Exactly. So you bring me right into my next point, and that actually also has to do with some setups and predictions for, you know, tomorrow and the next week or so. But it brings me to gold prices. Ticker symbol GLD has been on fire lately, and we've been talking about this in a bullish way for, I don't even know, Tom, at least like 3 weeks now, and it's been booming. And GLD had an amazing day on Friday, and this is happening as the war in Israel and Palestine is just heating up even more. So, you know, gold is an asset that people have resorted to for thousands of years when, you know, the world is scary, you know, and we're seeing the same thing right now. War is escalating around the world. People want that safety, and that's why we're seeing gold moving the way it is. So gold is something that I'm bullish on going forward. That doesn't necessarily mean that it has to go up tomorrow, but, you know, over the next couple weeks and months, you know, the way it's moving definitely has some pretty good potential. So again, I'm watching GLD to the upside.
Man, Mike, this has been in your plays, I think, every day for the past 2 weeks, just about. And honestly, I'm glad it has been, because every single day I look at gold, it seems like it's up. Of course, there's going to be little down days mixed in here and there, but for the most part, like, look at this uptrend the past few weeks, guys. This is fantastic. So I'm with you, Mike. I think gold is on a definite runner or killer right now as well. With my first play, though, it's not as fun as GLD, at least at the moment, and it's Boeing. They actually fell down with their earnings, and I'm looking for an earnings continuation play to the downside here. If they break that double bottom from last week, right around 176.20, I'm going to eye up those puts. They started falling down in after hours Friday, and if we go out to a daily chart, I just want you guys to see how bearish Boeing has been the past few weeks. It's been one of the most bearish stocks in the market, and I just feel like that it can continue here. If that bottom breaks, it's at least a good eye up for a scalp. So look at that scalp if that low breaks.
All right, sounds good. Another stock I'm watching pretty closely is the behemoth NVIDIA, but to the downside. So NVIDIA has definitely been pretty weak over the past couple of months, and it is now at the crucial $400 level, and it bounced off of it like 3 times last week. So I am looking at NVIDIA to the downside. The support level is huge, and as long as the market keeps moving the way it has been with this downwards bearish price action, I think NVIDIA can break below this support and, you know, show some present some pretty good opportunities. But again, we need to also see the market fall, because, you know, if the market is, you know, bouncing up a little bit, you don't want to be trying to trade NVIDIA to the downside.
Yeah, maybe not necessarily. There's always some days where like Nvidia might just tank and then the market goes up. But I definitely feel what you're saying, Mike. Most of the time, you don't want to trade things down if the market's moving. But I love that support here at 400. I'll say that I love it so much, Mike. I'm making an alert right now. That's how much I love it. I'll be eyeing this up Monday morning for sure. With my next play, I'm going with X, which is kind of like GLD, I guess. In a way, it's US Steel. And I've been talking about this one for a couple of weeks, and I don't think people have been giving this stock the love that it kind of deserves. It's been slowly but surely running to the upside and starting to get a lot of momentum coming in. So if it really breaks this high around 33.75, I'm going to look at more calls on it. It just keeps running up. These metals right now are doing great. And this is a steel company. And it looks like they actually did pretty well with earnings last week as well. So it's like an earnings continuation play at the same time. So watch X. The options are pretty cheap and can usually get some pretty decent moves out of them.
Alrighty, good stuff. Well, let's get right into the momentum plays. And with the first one, we have Chewy to the upside.
CHWY really consolidating down here. Now, Chewy has been crazy this year, right? I mean, look at this drop off. But if they start coming back right here and they break above $18.30, which was just above intraday resistance from Friday, then go ahead and look at those calls.
All right, with the next one, we have Tesla, but to the downside.
TSLA, pretty bad move on Friday. If they break 205, go ahead and eye up puts. And after they break 205, watch 202 and then 200 after that.
All right, and then with the last one, we have TLT for both directions.
TLT was wild again last week. I thought it was going to run up a lot. So if they break out above 84.50, then eye up the calls on TLT. But if TLT breaks down under 83.75, then go ahead and look at puts. I feel like this one has just been running a lot in both directions, Mike. But as those yields start to fall, I think that this that TLT will start to really run up here over the next few months or so.
All right, good stuff. So we have that upside level for TLT. If it breaks above that, we are looking at it for a call play. If it breaks below the downside level Tom listed, we are watching it for a put play. And then don't forget about Tesla with its downside opportunity as well. And then, of course, Chewy with its upside opportunity as well. But those are the momentum plays for today. If you guys are looking to really capitalize off of the opportunities we have right now in the market, you have to check out that first link in the description and the comments down below. Our bots have been on fire, and we have some awesome, mind-blowing new updates coming probably in a little bit over a week from now, Tom. So we've been working very, very hard over the past couple of years to build some of the best short-term trading technology in the entire industry, and we're, like I said, a little bit over a week from finally releasing it. But right now, basically, you could get access to our bots that call out day trade setups every single day. We have other custom bots that find out exactly what options are moving the most every single morning. We also present multi-million-dollar big money trades every single day before the market closes. These are the big money trades that we always talk about in the videos, but you get access to them the day before everyone else does, and a lot of times that leads to even better entry opportunities. So check out that first link in the description and in the comments down below. You can chat with Tom and myself all day long and network with a bunch of other great members and people. It's that first link in the description and the comments down below. But with that being said, Tom, let's get right back to the video. And it is now time for today's big money $3.3 million trade of the day. And we are looking at ticker symbol F, so Ford. And someone basically plowed $3.3 million into the Ford $9.35 strike call options that expire on June 20th of 2025. Ford is a company that has been struggling a lot over the past couple weeks and months. It has a recent high of around like $15.50 that it made in July. Now it's below $10. It just reported earnings, and it looks like the big money is like trying to buy this dip for the years to come. You know, the UAW strikes have not helped either, and Ford's definitely been struggling. So, Tom, what do you think about this one?
Ford is a stock that is very, very interesting to me. It's a stock that is taking a lot of hits right now. They're having a lot of problems with the United Auto Workers union, obviously. And I feel like that in the short term here, this thing could definitely keep going down. Look at how it just broke under a key trend line as well with those earnings last week. That was a pretty bad move under that trend and a bad move under support. So short term, I'm definitely still bearish here on Ford. But long term, I think that these calls are actually pretty darn good. I think Ford will turn around and start to move back to the upside a lot. Not right away, but it will take some time. But I think over the next year or so, it will start to recover. And these expire in 2025. So they're going to be holding these for quite a long time. So if you guys are expecting Ford to go up tomorrow based off this, well, don't expect it. You know, it's more of over the next year or 6 months or even year and a half maybe. So keep that in mind. But it's very interesting on Ford right here, Mike. Whoever these big money players are, they have some balls to be buying this one where it is, especially with the auto worker strike going on. There's so much with Ford right now. You have the auto worker strike. You have people hitting on them for like manufacturing in Mexico. I mean, there's a whole bunch of things that people are hitting on Ford lately for.
Yeah, and the stock's fallen a lot right now with some serious selling pressure. I think the setup has potential, but you have to be willing to hold it. You know, this option expires in 2025. There's a lot of time to it. The options are in the money a little bit. And again, it's not a bad setup. It's just if you decide to follow the big money here, you have to give it time, right? So keep that in mind going forward. But Tom, like I said earlier in the video, we have a giant week ahead of us, whether it's earnings, whether it's Powell, whether it's current price action. There is a lot on the schedule. Do you have any last minute thoughts or anything else you're looking at before we close out?
It would be really cool if Powell could come in here and maybe save the market, right? The SPY's been starting to trend a little bit lower. Powell might put on his mask and cape and decide, hey, this is one of the times where I'm going to make the market go up, you know? Or he could come out and do the exact opposite. See, that's the problem, right? What is he going to do? I kind of think that he's going to start talking a little bit more about easing or cuts, or maybe not easing, but maybe they'll talk about next year, maybe easing a little bit sooner rather than waiting so long to ease, or something like that is kind of what I'm expecting. And I'm hoping that he hits on something with Israel. He's going to get a lot of questions in the Q&A after his speech about Israel, I would bet. So hopefully he talks about those tensions, at least playing a little bit of a role into their decision, because overall it has to, because it affects everything from oil to our interest rates to everything if people start getting scared.
Yeah, Jerome Powell has a special way with words, right? And it's always important to tune in when he speaks. Again, Wednesday at 2 p.m. and 2:30 p.m. Eastern Time is the time to tune in. If you guys want to join in on this action, definitely check out that first link in the description in the comments down below to get access to our day trading bots, multi-million-dollar hedge fund trades, and to chat with Tom and myself all day long. You can cancel at any time in the worst case scenario. Last but not least, if you guys are new to the channel, definitely make sure to subscribe. You'll see our videos recommended to you more often. And giant shout out to today's member of the day, Jane Meow in the StockedUp Discord. You've been in the chat for around a month now, and you've been a great member of the community. Thank you guys so much for watching, and let's crush it this week in the markets.